What's next for our property investing portfolio? With all the changes in the property market and Emily and I being lucky enough to grow our property portfolio to around the $5 million mark, what's next for us in our journey? Now, we're at a point where we've got our base and we've actually started to move into our cash flow properties. We started by investing in an inner city property here in Brisbane. We did some renovations, then bought another property in April 2020, which you might have seen, which was the Baby Queenslander, where we renovated that property inside. We then came to this property, which is our own home, the Triple Gable Queenslander, renovated that property. And then we bought the unit block in Coffs Harbour. So we've got a handful of properties in Brisbane, which are more blue chip, close to the CBD. And we've also got that cash flow property down in Coffs Harbour. The next steps for Emily and I are to actually sit back and consolidate for a little bit. We've had a chat with some brokers around our lending position and the movement in interest rates. And at this point in time, with the business, with everything that's going on with ASA and newborn, things are moving quickly. So in the short term, in the next 1 to 2 years, we won't really be looking to make another property purchase. For us, it's going to be more about renovating the properties that we currently have, so adding value where we can. So going back to our first property, renovating the bathroom, painting the exterior of the home in some neutral colors, like some light grays and some whites, and then also heading down to Coffs Harbour and either increasing the rents significantly to catch up to market rate, because a lot of those units down there were well below market rate, especially in today's market. And so we did some increases, but over the next 12 to 24 months, we're going to need to increase those again to catch up with the interest rates that we've got now in the market and to get those rents back towards market rate. Now, if those tenants decide to move out, we'll probably go down and renovate the individual units at a point in time. So for example, one of the units is up for lease in November this year. So if they decide to not accept the rental increase, then we'll head down there, pull out the kitchen, renovate the bathrooms, refinish the floors, paint the entire unit, and just lift the standard of the property. That will help us boost the rental income, find a higher quality tenant, and help maximize the cash flow on that property as well. So for this next 1 to 2 year period, it's going to be looking at consolidating our position. I'm going to be investing myself more into the business and more into other projects that I've got planned, which I'll release soon on the YouTube channel. Looking a little bit further out in the next 3 to 10 years, Emily and I will continue to look to purchase properties and continue to do renovation projects. I really do enjoy renovating and taking you guys along for the journey. So in the next little while, we'll be looking at focusing in that 3 to 5 year mark in buying another cash flow property and potentially doing an owner builder granny flat. That would be a property that would have dual incomes where we can maximize the rental returns and also claim some depreciation benefits. The other big project we want to take on in the next 5 years is to lift this Triple Gable Queenslander and build in underneath. We have plans to turn this home into a 4 or 5 bedroom place with a couple of bathrooms so we can have a growing family here. We really love this location that we're in, and we want to stay in this home. So in about 5 years' time, we'll look to lift the home, probably have the bulk of the bedrooms on the lower level. We're not sure whether we're going to do a pool yet or not in the backyard because of the maintenance, or whether we're just going to do grass in the backyard. And then we're going to have open plan living and a study and a guest bedroom in the upstairs level. That'll back out onto a big deck and have a galley style kitchen, which has windows opening up onto that deck as well. So we've got big plans to renovate this home and really turn it into our family's dream home down the track. Not that it's not our dream home at the moment. In this stage of life where it's Emily, myself, and Asa, the three of us, it's great for us at this point in time. We might be even able to handle another child or two in this smaller space, because at this point in time, we're only really in a 2-bedroom Queenslander with a study and a sleep out as a bit of bonus space. So as our family grows, we're actually going to need to grow the square footage in our home. So that's why we've got plans to lift the property, build in, renovate, and extend the home potentially as well. I'm really looking forward to that project and seeing the architectural designs around it and it come to life, but that's a long-term vision. That's not going to happen in the next 1 to 2 years. That's more of a 3 to 5 year time horizon. If you've been following the channel for a little while, you'll know that our cash flow targets were $50,000 passive income, $100,000 passive income, and our final goal is $150,000 passive income. Now, at this point in time, based on the interest rates, based on our rental yields and our other operating expenses, we've actually hit our first target of the $50,000 passive income. So for us, we're looking to build up our buffers in our offset accounts and then eventually use that money for the major renovations down the track on this property. property. So if we could build up several $100,000 worth of savings over the next, say, 3 years, we'll be paying less interest over that period of time, and then we'll be able to utilize that capital when we want to deploy it into a property project. Building up our cash flow buffers will help us get closer towards our passive income goal, as we will pay less interest on our property. And I'm super keen to work towards that $100,000 passive income target, because that's when I really feel we'll be able to open up the floodgates in terms of taking on a couple of other crazy projects and maybe starting new businesses. I have aspirations to move into the tiny house space or the affordable housing space here in Australia, and maybe taking on some larger scale developments. So that's all in the potential pipeline over the next 5 to 10 years. Really, at the end of the day, property investing is a slow burn. We've been working on this for about 10 years. We've been investing since 2018 and manufacturing value on every single project that we've bought so far. So if you're looking to fast track your journey, manufacturing value is one of the most important ways to do that, because it's going to speed the process up. If you can buy an ugly duckling, which has nicotine on the walls, which has holes in the floors, which has rotten out bathrooms, potentially termite damage, and a whole host of issues, if you can handle those issues and handle those problems, then once you're able to find an affordable solution, you potentially create value and create equity in your property portfolio to allow you to leverage and buy more properties, or to live off the passive income and create a larger cash flow. So really, at the end of the day, we're going to continue to chip away at our debt, build up our offset account cash flows, potentially look at cash flow purchases in the next few years, and also look at doing a major renovation on our principal place of residence. I'm not the type of person that's going to need 30, 40, 50 properties. I think a handful of great properties will suit us over the long term. We might look to continue to grow the property portfolio to around 5 to 10 properties, but we've bought larger price point assets, which means we've had to deal with less transactions as investors, and we've tried to buy more blue chip, more long-term buy and hold properties, which we could add value to in the short term. I know a lot of other investors here on YouTube buy more cash flowing properties to try and grow the property portfolio. So maybe buy properties in that $300,000 to $500,000 price range with a 5 to 7% cash flow, because the banks will then lend them more money. But for Emily and I, we've been on quite strong day job incomes over the last few years, and we've been able to leverage ourselves by creating value and creating equity to grow the property portfolio to the $5 million mark. Now, I make it sound fairly easy, and property investing is both easy and difficult at the same time. I'd say it's easy to understand and difficult to implement and take action. So really, at the end of the day, if you're watching these videos, make sure you're taking action in your own property portfolio. I'd love to hear down in the comments below what your plan is for your property portfolio. Make sure you drop a like on this video, subscribe to the channel down below, head over to purposeproperty.com.au if you're looking for a Brisbane buyer's agent, and I'll see you in the next one. Peace.